Hello guys, welcome to this video. So in the previous video we have discussed how to trade imbalance day. So in this video we are going to discuss about how to trade a balance day. Right? So the balance day is nothing but it occurs when there is no range extension in the market, when there is no single print. So there is no single print, there is no range extension, and even if there is a range extension, that range extension happens with less volumes. So here one thing you should differentiate is that even though range extension happens with less volumes, if there are single prints still holding, so this scenario doesn't qualify to be a balance day and it still qualifies to be an imbalance day, right? So in the first case, if there are single prints, you should take that day out of the context of a balance day. But only case where it can turn out to be a balance day is when the strength of that imbalance is not so strong. As mentioned in the other video of the imbalance, if the strength of that imbalance is not so strong, then you can still expect it to turn out to be a balance day. But if that is not happening, right, if the strength is very good, then even after getting a range extension with not so great volumes, you should still see it as an imbalance day. That's one of the keynote that I wanted to mention, right? So considering that you know how to differentiate between the balance and imbalance days, so these are the criteria, or um, these are the do's and don'ts that you should be doing when you're looking to trade a balance day, guys. So in the balance day, we are distinguishing the day with a range extension and the day with a non with a no extension, right? So when you see the balance day, you normally come to that conclusion when there are contradicting positions by the big money in futures. That's when you should ideally expect a balance to be in place in the market, right? And when that is there, you should keep track of the activity that is happening in the market at the initial balance high and the initial balance low. That is where you should be looking for activity, if there is extension coming or is there an exhaustion that is coming, right? So if there is an exhaustion coming every time it's going to the IBH and IBL and there's no follow-ups coming, that's the key. That's the first trigger for you to um, appreciate that the day is turning out to be a balanced day, because there are already contradicting positions you're already aware of. And in these kind of days, so you should be normally be entering a short trade close to IBH, right? And a long trade close to IBL, right? But also when doing this, you should also monitor the activity there, and give a market like a 5-10 minutes to make any extension if it wants to make, right? And usually extensions on a balance day happen in particular periods, right? So like it happens either in G period, which is about 12:45, 12:10, 12:15 to 12:45, right? Or it happens near to the 1/3, 1:15 to 1:45 June, right? That's I period, right? So G and I period are the places where you would see these extensions happening, but they will not be successful because there are no volumes driving them, right? So that's why you should also monitor the activity that could result in an extension also, and usually this happens in G and I periods, right? And even though the extension happens, it's not an imbalance, because you should also have a very good volumes that are built ups which are more than threshold that are driving that extension. If that's not the case, it's still a balance, right? But keep in mind this one, that in the I period and G period you will be having a fake extensions on a balance days, right? And so now we know that okay, the balance days could be occurring either with an extension or without an extension, right? So we will now see in the next slides what we should do if there is no extension in terms of our entry, stop loss and target, and what we should do when there is an extension with not so great volumes, qualifying it to be a balanced day, right? So this is the one opening contradicting, monitoring the activity and extension with. So this is the IBL boundaries tracking the activity at IB range boundaries, right? So then after that we have, so okay, we got that it's not a no extension day, right? So what we should be doing in a no extension day is that, so we should be selling near IBH, like give a buffer of like 4-5 points in Nifty and 25 to 30 points or 35 points in the bank Nifty, give buffer of that much, and you should be selling near the IBH and buying near the IBL with a stop loss, with a defined stop loss. And also note that your trading size, your position size should be small, right? The reason for this is there is no trend that is going to come, right? And there's a good chance of your stop loss also getting hit. The reason for this is balance days are most erratic, right? Even if you're entering at the exact IBH or IBL, still it can just come and hit your stop loss and then reverse again. So on a day with no extension especially, you should be very careful. But it's not that you should be scared, but you should enter around the IBH. You should enter for sure with a defined risk, right? In Nifty you take like 15 point stop loss and you put 1 is to 2 as a target, right? So so when you enter at IBH, your target will be IBL, right? And when you enter at IBL, your target would be IBH. The expectation is that the market rotates within these two references of IBH and IBL, right? Because there is no extension that happened, right? And so in G period and I period, don't trade this IBH and IBL journey, right? Don't sell at IBH, buy at IB low within these periods of G and I, right? When you don't do that and give time in those periods for extension to come in, then you'd be having an opportunity to trade the day with an extension, right? So that's the thing. And also your expectation should be very, very low on a balance day, right? So your entry and exit should be very, very quick. And whenever you get your required desired points, scalping points, you exit out of the trade. That's it, right? And when there is an extension that happens, like it usually happens in G and I, but there's no hard and fast rule that it should happen in those periods. It could sometimes happen in F period as well, right? F, G, and I, you should just keep an eye on, right? So when that extension happens, the first thing that you should ideally see is that there should be not great build-ups that are driving that extension, right? So when that happens, that qualifies it to be a balanced day, right? So then what happens after that extension is that, so there is a demand or supply zone formed at that after that extension. So if the extension is to the downside, so there is a demand zone that is formed over a period of time at a particular price, right? So that becomes your entry point for a long trade, and your target would be VPOC, right? Your target would be the VPOC of that particular day, right? So that's one way to trade these extensions without which are occurring without much big build-ups, right? So same way you should trade an extension to the upside with not so great volumes, right? And on these particular cases, also note that there should not be any single prints, guys, right? So if there are single prints, we should only look in the direction of that single print. We should not be trying to mean reward, right? So on the short side, so you would be entering at the supply zone with an objective of the VPOC. And your stop loss would be same as told earlier. It will be a defined stop loss, say absolute stop loss of 15-20 points, like that, not more than that, right? Also your size should be not so aggressive, because we are not expecting a big movement. It's all about a few points that we are looking for, right? So you have to trade based on your risk, how much you take and how much you want to reward, like that. But the targets are like this, from the extension down to the VPOC or the extension up to the VPOC. That's what you're looking, the setup you're looking for is that, on a day with an extension, but it's still a balanced day, right? But no extension, then sell IBH by ABL, right? And you should be very quick in entry and exit, right? So that's how you trade a balanced day, guys. Right? The balanced day key criteria in terms of the order flow or the open interest data is you will see contradicting position happening at the open, and you would see very less meager volumes coming in late in the day, right? After initial volumes, you would not see any volumes coming in, and that's a clear indication that this is turning out to be a balanced day, right? So that's how you should trade a balanced day, guys, right? So with that, I'll be wrapping this video up, right? So that's the thing. The next video will be on some miscellaneous concepts, right? So that will be discussed on few rules that we follow for deciding positional targets, or the some important market profile rules that you should be having in mind. So that will be the concept in the next video, right? So with that note, I'll end this video up, right? So thanks.